But where does that leave the traditional IT services play? I mean, one would have thought that they would be the first ones to actually adopt to AI. Yes, many are now getting into data centers, and we have one large IT services company announced that a few weeks back. But do you really think they will be able to catch up on the entire AI/tech innovation?
Well, I think that's a good question, and it is certainly not clear that they will. They could actually be part of the constructive or the creative destruction. So it's really a question. It's interesting, a few years back, we thought that they were actually going to benefit, and now we actually see that AI may be a competitor to them. And I don't know how that's going to play out.
Do you think one is safer when it comes to India to invest in the consumers of AI as opposed to the innovators? Because that's where you don't have clarity right now.
Yes, I do.
Yeah. When you talk about China, and we must address that piece, because part of the outflows from India have also, found their way into China, and it has a much higher weightage now in the emerging market basket as well. Wanted to understand whether that's just a tactical play or is it a structural story from the COVID lows that we've seen in the last 1 year?
I think it's a tactical play, and certainly I think that longer term, the structure of the markets in India is more positive than China. So when I'm talking to foreign investors who ask me the difference between China and India, I say you have to be careful to always know that the economy is not the market. So China's economy has had phenomenal growth, but China's market has had dismal growth. India's economy has had good growth, but India's markets have had phenomenal growth.
Yeah.
Why?
Yeah, why?
Because the economy has translated into revenues and earnings growth in India that in China, they just haven't had a return on their investment in the same way. And if that continues, ultimately, it is earnings that drive equity markets. It's the earnings that drive the productivity. And that structure that India has is incredibly positive for the long-term view.
Well, when it comes to India, and we've addressed IT, but when you talk about sectors, is it banking, financial services? Is it infrastructure? Are those the structurally strong plays, you think?
Yeah, so I'm not such an expert on
just a broad
India
view
in general, but I think that yes, probably the consumer. I think that the industrials can probably do a lot better in terms of their efficiency, and the growth in India is going to be represented in their banks.
But what has been really surprising is the way some of the crypto assets have done.
Yes.
Has that come as a surprise to you, and the kind of now sort of global acceptance that it's finding at global stages, if you will?
Yes. To be honest, it is a surprise to me, and I think partly because as a kind of traditional investor, it's been hard for me to get my head around cryptocurrencies and then to think about how they might make sense in a portfolio. So if you'll indulge me, let me tell you my learning path on that. First of all, with just the blockchain in general,
yes.
I think the blockchain is probably something that will take effect and will have a lot of effect within companies, especially financial services. It's hard to invest in that per se. Crypto is a little different than that. And with crypto, I divide it into two categories. The first category, which is primarily Bitcoin, is very similar to gold. It's just an asset that has a value based on whether people think it has a value or doesn't have a value. And so you have to value that in the same way you do with gold. First point is then it is an asset that you can value, so it's a legitimate asset to put in your portfolio. Okay. So then the next step is your question, should you put it in your portfolio or not? The problem with putting crypto into your portfolio is it's so volatile. If you're managing your portfolio to any risk target, that volatility has to take something out. And what it takes out is equity. So you put 2% of cryptocurrency in your portfolio, you have to take out, I don't know what the right number is, but 5% of equity, and you don't want to do that. So you have to rethink what type of portfolio you want. And so you do that by adding cryptocurrency to your benchmark. And you have, in essence, readjusted your risk tolerance, and then you can add cryptocurrency to your portfolio. And then some diversifier, either it's precious metals like gold or cryptocurrency, probably makes sense to be 2 or 5% of your portfolio.